Asset management firm Cathay Conning says the Eurozone debt crisis and election results in France and Greece show the risk hierarchy in Europe is changing. CCAM CEO Mark Conan thinks the traditional position of sovereigns taking precedence over corporate ratings needs to be reviewed.
Some of the corporates are holding up better than some of the sovereigns within each of the markets. So something we are going to emphasise with our clients is perhaps moving away from the conventional approach of sticking to a benchmark-driven allocation.
Conan says Europe and US market reaction show investors think Eurozone commitment to reform remains intact.
Markets were a little bit more put it more in perspective, I would say, the election result, and started to think about, the benefits of some of the statements that were made subsequent to the election, particularly from Angela Merkel, pointing out that the Eurozone's commitment, despite having changes of government, to the overall agreements that have already been put in place.
But Conan adds Greece seems headed for an extended period of uncertainty.
The ruling coalition there is going to find it very difficult now to rebuild that coalition, and it's looking like, despite that baton being passed from one party to the next, in order to try and find that coalition, it looks as though we're going to face another election in Greece, and the certainties or the uncertainties that were raised at the time that the government was put together will slowly resurface. No one's questioning Greece's commitment to being part of the euro, but there's clearly a strong consensus amongst the voting public that this package of austerity measures is just too harsh in terms of the effects that it's having on the general population.
New Democracy Party leader Antonis Samaras surrendered his mandate to form a coalition government Monday evening, just 5 hours after receiving it from the Greek president. Arnold Gay, Reuters.